This is $65,000. I gave it to you right now and I told you you have 5 years to make it to at least $2.5 million. Can you do it? What would you do? And let's see if we can put with our editor here a timer for 5 years and see the numbers down and see if we can get it. Let me walk you through what it looks like. Now, let me know in the comments below what you're gonna do with those $65,000 to get to $2.5 million. Tell me what you're gonna do. I'm gonna show you right now how you can do that with business acquisitions and what the process looks like. And first, let's be aware of the risks, right? Whenever you invest into anything, I don't care if it's real estate, stocks, bonds, Bitcoin, I don't care, you have some risks, right? So you need to be aware of it. So what kind of risk you're willing to take and what kind of returns you're willing or looking to get from your investments. And it all obviously depends on you, depends on your risk profile. If you're looking to risk your money, if you're young, if you're old and you need that money, if you're looking to diversify or to concentrate, right? Those are some of the things you need to keep in mind. So if you take like US Treasury bonds, where you can get like 2-3% just to cover inflation, right? Those are considered super safe, although right now with all the printing, who knows? And on the other side, you can put startup investments, right? So startup is super risky, like 90% of them fail, even if they're being backed by venture capital firms or investors, a lot of them fail. So if you're investing in startups, obviously you want to get much higher returns on those who win. So that's kind of like the way to look at risks, right? And I would say small business, so investing, buying small businesses, if you're putting your own money and you're looking for returns, is somewhere in between, right? So I'd say if you look at like investing in startups, in companies that just started, that's the super risky thing, or even consider like Bitcoin. And on the other side, if you look at US bonds, treasury bonds, things like that, I'd say buying small businesses that exist for at least 5-10 years are somewhere in between. Another thing to remember is you need to ask yourself, like, where are you going to put your time? So buying businesses can be passive, can be active. Same with startups and same with when you invest in US bonds, obviously it's super passive, right? So that's something to remember as well. So remember, you have $65,000, you need to get it to $2.5 million. What you going to do? Right? So for the sake of comparison, let's look at the numbers. Let's look at what it looks like to do it in business. So let's assume we found a great deal. We, got an offer accepted. We're signing the documents. We just bought a business and we put $65,000 of our own money, right? Let's assume that for a second. And let's assume that we can also raise 90% out there from a loan. So a bank will loan us 90% of the purchase price. So that means that $65,000 will give us $650,000 worth of assets, or purchase price in our case for a business, right? So I hope you're with me. I don't want to overwhelm you, but in a nutshell, what we have right now is a business worth $650,000, right? Simple numbers, $65,000 that I gave you and you invested, and the rest of it came from a bank that loans us the money. Now let's also assume that if we paid $650,000, we paid the multiples of around 3 times on their pre-tax profits, on the business pre-tax profits, which is a very fair multiple and evaluation for that size of a business. So that means that now we have a business bringing us around $200,000 a year in pre-tax profits. Remember, we paid $650. We assume we paid around 3 times the multiples on that. So we're doing around $200,000, just to keep the numbers simple, in profits, right? And depends on the sector, depends on the margins. I want to assume we have a business doing around 1 to 2 million a year in revenues. So $65,000 that I gave you is now giving you a business that's bringing you 1 to 2 million a year in revenues. Are we clear so far? And let me know in the comments if you have any questions. So I hope you're getting excited just from that alone. And we didn't even start our journey here in the 5 years. Remember the 5 years journey that we have here? We didn't even start. But what we have right now is a business doing us around $200,000 a year in pre-tax profits. And that's assuming that we're not doing anything in a business. That's assuming that we're not growing it. That's assuming that obviously we're not doing anything to destroy the business, or we're not going out there, I don't know, burning the place or something. So assuming that you have common sense and you're being, smart, the business is going to continue to make at least $200,000 a year in profits. Remember, you put $65,000. That's more than 100% a year return on your money in year 1. Now, again, I don't want to overwhelm, because obviously you probably need to pay back debt service for the loan, and you have some interest to pay, and you have some other expenses. So let's assume that you pay half of your pre-tax profits, the business pre-tax profits, back to paying all of this, right? You're being left with at least $100,000 that you can now keep in your pocket after you invested just $65,000 of your own money. So you put 65, and you can take that money out in year 1 plus be profitable. That alone should get you super excited about what's possible. In real estate, if you put the same amount of money, that will probably take you at least like 5 years, and that's assuming you have a really good deal. So cash flow is so much better when you buy a good business compared to like other like real estate ventures, for example. But that's before we even talk about appreciation and exit. So let's dive a little bit about the numbers about exits and what that could look like. So what happens if you grow the business now 10, 20% a year? What would that look like? Remember, assuming your business is now already making 1 to 2 million a year in revenues, you grow around 20% a year right now. Within 5 years, obviously it depends on you, depends on how good you are at managing a business or how willing to learn you are on managing a business, or how good are you at hiring people and making sure your team is executing. Remember, when you buy a profitable established business, you're not on your own, you have a team, people who are expert in their field. They're doing a lot of the day-to-day menial work, while you need to be the leader, hopefully the CEO of that business, right? So that's your role, remember that. And obviously, the better you are as a CEO, the faster and better this company can become. And obviously, beauty with business is that there's no ceiling. You can go as big as you want, or you can go down as fast as you want if you're doing nothing. It's on you. You put life in your hands, which is what I really like with small business. It's on you. You're in control. You have the option to set the rules, to make decisions, and to create what you want with that business based on what you think is possible. Now, if you take those numbers and you grow around 10-20% a year, you can definitely grow this business to be making 3 to 5 million a year in revenues. And now let's assume around 20% pre-tax profit in terms of margins on that business, assuming that you grow the business, you optimize the operation a little bit, right? You did actually something. You optimized, you tried to make it better. You've been creative, you went out there, you potentially brought into technology, you hired younger people, right? Because a lot of those businesses that you can buy are owned by baby boomers, like all the older generation, they're retiring, and a lot of those people are still literally not even on the internet. Just by you bringing in some technology, some marketing, you can grow those businesses very fast. 20% a year, that's me being very modest here. Like I've seen businesses growing like 100% a year in the first year, just by bringing some of those technologies, some of the marketing and stuff like that into an old school business, a more traditional, boring business. So let's assume after those 5 years, you now have a business doing 3 to 5 million a year in revenues. Now remember, during that time, you also pay back the loan, right? So you almost like build yourself equity in that deal by paying back the loan during that time. So with 20% assumption on profit margins here, you now have a business bringing you between 500,000 to $1 million a year in pre-tax profits. Call it owner benefit, SD, whatever you want, all the same. So now after 5 years, your business is bigger, right? There's less risk for a new potential buyer or an investor. You see why this is getting exciting? If you've been smart in that period, you've done all those things. Not only that you brought in technology, maybe you changed the model of the business a little bit. Maybe now you brought in a little bit of recurring revenue into the business, right? That could be exciting for a potential investor and a buyer. Maybe the business is not dependent on you to run the business day to day. Maybe there are great processes that everyone from the outside can come in and see what's needed to be done. Right? Maybe you did all of that too. That could be super exciting for a potential buyer. And now let's assume that you want to sell the business. It's year 5, you want to sell it, right? And let's assume that you also now were able to build relationships with a strategic partner or a strategic buyer. Do you think that that would be exciting as well? I can tell you the answer is yes, 100%. Because a strategic buyer will pay much more for a business. So let's assume you've done all that, and let's stay on the modest side of things, right? Let's say your business is only making $500,000 in pre-tax profits, right? Remember, we talked about the 1 million range. It can make much more. It's on you. But let's be modest here. Let's show you something reasonable, and let's actually play what's possible. So let's say you're only making $500,000 in pre-tax profits. And let's say that now you can buy a buyer that will pay you a little bit more than what you paid before. Remember, because now your business is bigger, it's less risky, it's worth more. That's the reason that the biggest companies in the world actually worth more, because they're less risky for an investor. And in terms of biggest companies out there, like they're basically liquid as well. Like you can go in and out very fast, and that's the reason for their valuations. But in small business, in your situation right now, because you grew the business, you can sell it for more. So your $500,000 pre-tax profit can get you at least 5 times multiples on your EBITDA, and that's me being very modest, and that's me not even assuming a strategic buyer. A strategic buyer can pay you much higher multiples, potentially even multiples on your revenues, if you have some of the things that we talked about before, right? Like recurring revenues and other exciting things that you brought into the business. Maybe you have some IP now, or trademarks, or technology, or things like that, that is much more exciting for people. You sell your business right now for $2.5 million after 5 years. Remember how much you started with? Remember what's the check that I gave you, or I gave it to you in cash maybe? $65,000. So if you have $500,000 in pre-tax profits, you sell it for 5, that's 2.5 million. If your business grew up to 1 million in pre-tax profits and you get 5 on that, that's 5 million. Not too bad on a 65,000 investment, isn't it? Good luck getting those returns in real estate, in the stock market. Good luck. If you're lucky, you'll get 8-10% a year. And that's me being very generous with you. So that was our challenge. I hope you got excited from that. And that's why buying businesses is where it is, my friends, at least for the next decade. I hope you're excited from that. So am I. Let's get to work. Let's get you that. If you need help getting the $65,000, let me know. There's so many other ways to get this done. This is just one way, right? I hope you're excited. So am I. I'll see you in the next time.